All right, guys, I have scoured and researched, and from personal experience, I have compiled the top 5 highest yielding dividend stocks on the market today.
Yay!
But that does not come without risk. So I have compiled the top 5, number 5 being the lowest and number 1 being the highest, and you will not believe how high of a dividend yield number 1 is. Stay tuned to find out. Before we get into that, I'm going to go over some guidelines. While high dividends have a natural appeal, investors should be careful they're not buying fool's gold. An investor should ask, why is this dividend yield so high?
Why?
In some cases, a high dividend yield can indicate a company in distress, mainly financial distress.
Oh no.
When you guys hear the term value trap, this is what we're talking about. This is what they're talking about. For example, suppose a company XYZ trades at $50 a share and pays a $2.50 annual dividend for 5%. That makes it 5%. So a negative, like external shock, which means financial problems, sends the stock to $25. The company may not cut its dividend immediately. Therefore, at a superficial glance, company XYZ appears to now be paying a 10% dividend yield. Don't fall for that. Make sure you guys are following, going over the company's cash flow. It is important. Check out the financials of each company. Don't look at the dividends just because they're high. Usually there's an underlying issue. Not always. Sometimes. Later on this video, I will go over there is a company that has potential to create something. So without further ado, let's move on. 5, Rhythm Capital, ticker RITM. It currently pays a dividend yield of 9.02%. As you can see though, the revenue's down, the net income's down, the diluted EPS is down, net profit margin is down.
Oh no.
It's currently trading at $10.81, which sounds very cheap per share, but it's down 20% all time. So that's not good. If you're earning a 9% dividend yield, but you're down 20% all time, it's not a very good investment. Rhythm Capital Corp stock underperforms Monday when compared to competitors. And here's another negative headline for this company. Lineweaver Wealth Advisors LLC sells 5,208 shares of Rhythm Capital Corp. So you guys do your own research for each company. These are the highest ones. If you are risk averse and you can handle the risk, these are the ones. So moving on to number 4, Brandywine Realty Trust. Ticker currently has a dividend yield of 13.16%.
Whoa!
It's trading at $4.56. It's down almost 85% all time. As you can see, the revenue's way down, net income's down, diluted EPS is down, net profit margin is down, operating income is down, but surprisingly, the net change in cash is up 165%. Moving on to number 3. As I mentioned earlier in the video, Medical Properties Trust, ticker MPW. This has potential to go up, has some upside, and we'll go over why. So dividend yield is at 13.92%, so almost 14%, which is very nice. And it's currently trading at $4.31, which is extremely cheap, but it's down 60.82% all time. So let's go over why this particular company plummeted so much. So last August, Medical Properties Trust adjusted its quarterly dividend. It cut its payment from 29 cents to 15 cents, so basically nearly a 50% decrease to better align with its cash flow profile. A big factor has been the financial issue of its top 2 tenants who haven't been able to make their full rental payments. So if you guys don't know, Medical Properties Trust is basically a landlord for one of the largest, if not the largest, hospital rental real estate REITs. And in a later video, we'll go over what REITs are, REITs. But this has potential catalyst for repayment. Those companies, those top two tenants that were having issues. So there is potential that medical properties will get some of their money back, or if not all of it. So maybe that's something to keep an eye on. If you guys are into risk adverse, who knows? The potential could be really high on this. That's just my opinion. You guys do your research. Moving on to number 2, AGNC. Goes by the ticker AGNC. The dividend yields at nearly 15%. You can see 14.85%. It's currently trading at $9.70, but it's down 51% all time. You can see the revenue's down, the net income's down, diluted EPS is down, net profit margin's down, operating income's down.
Oh crap!
You guys do your research.
Oh,
but you can see
crap.
why don't fall for that dividend yield.
Oh crap!
Even though it's high and it's really at the low price, the trading price is really low. The dividend yield's high. You're like, wow, I can really make a lot of money.
Oh crap!
That may be true if you pick the right one.
Oh
crap! But always do your research before you put your money in. So, without further ado, here's number 1. Express, ticker PETS. It has an astounding dividend yield currently, as of this video, of 25.64%. That is unheard of. That's who wouldn't want to put $1 in and you get $1.25 back? So $4.76 is what it's currently trading at. As you can see, it's down 37.2% for the year. Now the issue today is that the payout ratio is well in excess of 100% of earnings. As the dividend run rate is $1.20 against 77 cents in projected earnings per share. That equates to 155% of earnings, which is obviously unsustainable long term. While we expect earnings to rebound from the current levels, we have concerns about the company's ability to continue to pay its dividend, let alone raise it. So there you guys go. There's the top 5 riskiest, top 5 high dividend yielding stocks. If you guys are into that type of thing, there's your list. If you like money, hit the subscribe button. Thank you for watching. Talk to you in the next one.